Ladies and gentlemen, good day and welcome to Srivari Spices and Foods Limited Investor Conference Call. As a reminder, all participant lines will be in the listen only mode and there will be an opportunity for you to ask questions after the presentation concludes. I now hand the conference over to Ms. Sushma Reddy, Company Secretary, for the opening remarks. Thank you and over to you.
Good afternoon, one and all. I am Sushma, Company Secretary, Compliance Officer of Srivari Spices. I'm pleased to welcome you all to Srivari Spices and Foods Limited Investor Conference Call. Before we begin, I would like to extend a special welcome to our esteemed investors, board members, and stakeholders who are joining us today. Today's agenda include mainly on discussion on financial performance of the company, growth strategies, and Q&A session will be there. Without further delay, I would like to invite Mrs. Neha Rati, our respected chairperson, to address the meeting and take us forward. Over to you, ma'am.
Good afternoon, ladies and gentlemen, and esteemed investors. I welcome you to Srivari Spices Food Limited Company, and today for the investors meeting. Today, I am pleasure to share a vision for growth and innovation. Here, I am very pleasure to share about our innovation. Our team has worked tirelessly to drive progress and to excite about the future prospects. Srivari Spices and Foods Limited is founded in 2019 in Hyderabad. It's a fast growing company committed to delivering authentic Indian food products which has focus on best quality, innovation and accessibility. With our 88 SKUs across the categories like atta, spices, masalas, and now we have upcome with oil. Under the flagship Srivari brand and 500 plus SKUs under the Paustik brand. 500 SKUs are coming under the Paustik brand. The company has established itself a name in both the traditional and the modern grocery segment. Here in the here FY25 marked as the transformative year for the Srivari with the significant milestone influence the launch of new oil segment. A new oil manufacturing facility is expansion into the e-commerce division called Postic. Grocery segment and the grocery segment, we have come up with a deeper market penetration through the strategic tie-ups with the platform like DMart, Jumbo Tile, and Big Basket, and also with Udan. The company focus on the innovation, integrate transparency, and the health conscious offerings continues to drive the customer trust and loyalty. We totally focus on the purity and the quality of the products. On the financial front, Srivari reported a robust growth with FY25 revenue from the operations reaching 11,380 lakhs, up from 7,828 lakhs in FY24. Looking ahead, Srivari is well positioned and sustainable and scalable growth. With the successful roll up with the Postic, this is the trust led e commerce model to meet the rising customers' demand for the health and curated food options. So here they in the Postic they will be having a lot of options where they can go for the quality products. Enhance the dealer networks, targeted marketing, and ongoing R&D investments. Srivari aims to explain its footprints, deeper rural and urban penetration, and unlock long-term values for all the stakeholders. We remain committed to blending legacy and innovation. We promise here the purity will retain as it is always, and it will be always with the purity products will be coming up with the more and more new products. So I'll end up here and I'll forward it to the Sushma.
Yeah. Now I'll take up you to the presentation about the performance of the company. As discussed, we are going to discuss today about the performance and business strategy and business model. As already explained by ma'am, we founded in 2019 in Hyderabad, and we are a FMCG company offering 88 plus SKUs in atta, spices, and masala oil under our Srivari brand, and 500 plus SKUs in our grocery under Pause. So our revenue is almost evenly split between two core product categories. Masalas contributing 49% and atta contributing 55%. And we launched our edible oil on 10th May 2025. And it started its commercial production on 10th May 2025. And when we come to our evolution, we started in 2019 by setting up a of the art production facility in Telangana, focused on manufacturing high quality spices. By 2021, we had expanded our spices portfolio, and in 2022, we introduced our chakki atta to growing demand for fresh stone ground flour. The same year, we were honored with the Best Emerging Spices brand awarded by Business Mint, which validated our brand's growing presence. And in 2023, we launched our IPO and secured product placement in several reputed marketplaces, greatly boosting our retail visibility. We also partnered with Solve to streamline and scale our B2B operations. And most recently in 2025, we launched our new oil production plant, introduced a new vertical called Paustic, which focuses on nutritious, rich food products aligned with our mission to bring health and tasty together. Our vision is mainly is rooted in making healthy living a right, not a privilege. We are working towards a world where clean, nutritious food is easily available and doesn't feel like a burden or a compromise. Through our online platform, we are committed to delivering top quality, healthy food that consumer can trust. It's not just about selling products, it's about building a lifestyle around wellness, honesty, and long-term impact. Our chairperson, Mrs. Neha Rati, ma'am, she's our whole-time director and also a promoter of our company. She has been associated with the company since its inception, and she brings over 17 years of leadership experience primarily from education sector, and she plays a key role in shaping our organizational culture and driving major business decisions. And Mr. Narayandas Rathi, sir, our whole-time director and promoter, he brings over 20 years of experience in the food industry. He holds a bachelor degree in commerce from Osmania University. Before joining us, Before joining us as a marketing head, he was involved in his family business, trading grain, spices. And Mr. Rathi was appointed as an executive director in 2022, later become a whole-time director in 23. He currently leads our production, sales, marketing, and quality divisions, driving key operations and growth. Our business model, channel, and product strategy. So sourcing of our products and the resource. I mean, one second. Yeah, we source our chilies from the finest farm across Guntur, Khammam, Warangal, Raichur, Malakpet, and Hyderabad regions, renowned for their spice quality. For our Srivari whole wheat atta and Sharbati atta, we procure premium wheat grains from uh, Sihor, Vidisha, Sironj in Madhya Pradesh, known for producing some of the best quality grains in the country. and we process it in India's best choil automatic grinding unit, and we give the world class packaging. And our key markets are Andhra Pradesh and Telangana, and we deliver our products to the suppliers. We deliver our products directly at the doorsteps of our customers using 18,000 plus retail stores. When it comes to business segment, we currently operate through two business segments, Srivari and Paustic. Srivari is our traditional business arm. It focuses on manufacturing and sale of our core staples like spices, masalas, atta, and oil. This segment forms the backbone of our operations and leverages strong B2B and wholesale network. And on the other hand, Paustic is our new age, digitally driven vertical. It focuses on online sales, offering direct to customer delivery and targeted distribution to local retailers. Paustic is designed to meet the growing demand for healthy, convenient food choices with an emphasis on nutrition and accessibility. Our channel strategy is designed to cover our key touch-up points effectively. On the B2B side, we focus on HoReCa, that is hotel, restaurant, and caves, and institutional clients, providing them with tailored large volume supplies. For B2C, we leverage a multi channel approach, like general trade, reaching traditional retail outlets, modern trade, including supermarkets, organized retail chains, and a strong network of dealers and distributors who ensure wide market penetration. Additionally, our e-commerce presence plays a vital role, especially through grocery platforms, and our direct-to-consumer brand Paustik, which caters to the growing online demand for healthy and convenient food products. And we have successfully placed our products on Avenue e-commerce limited online portal, that is DMart, and also successfully placed on our products in 29 Ashodhya supermarket stores across Hyderabad and Secunderabad, and captured consumers base at 13 premium large format outlets at Balaji Grand Bazaar. Looking forward to introduce our Paustic products in all third-party e-commerce platforms under Srivari brand name. Then Paustic product strategy. Our product strategy mainly maintaining healthy margins while delivering consistent value across categories. Like for spices and masalas, cart value is between 30 to 35%, wherein with a margin of 35 to 40%. And pulses and grains and whole space, cart value will be 40 to 45% and margins with 30 to 35%. And oil and ghee and other products, cart value will be 15 to 20%, margins will be 18 to 22%. And our manufacturing setup is designed for a capacity and operational effectiveness. For spices and masalas, we have an installed capacity of 3,600 tons per annum with a current utilization at about 2,637 tons. When it comes to atta, 14,400 tons per annum installed capacity, and we have utilized 12,650 tons. Regarding oil, we have installed capacity of 7,200 tons per annum, but this plant is yet to be commercialized. Growth drivers, Paustic. Now I request our whole-time director, Sir Narayan Das Rathi, sir, to take up on Paustic.
Thank you, Sushma, and welcome to all investors. I'm very much happy to address this investors meet. So, as our growth drivers have gone through the presentation, but I want to focus on the Postic. So, some investors have a confusion that Postic is just like Blinkit or Zepto or any other quick commerce platforms, but it's not like that. So, we are focusing on our USP in Postic is purely clearly and purely on high quality ingredients. Our product will be high quality range, and Postic is a premium kind of application which delivers only premium quality range. And if you go through all the quick commerce that will deliver in 10 minutes or 15 minutes or whatever the 30 minutes, we are not a quick commerce, we will deliver a second day delivery. As a grocery, we are purely doing only grocery on the e-commerce this platform. We are not doing any other kind of product like snacking or chips, soft drinks or anything. Simply only purely kitchen related grocery stores. So that is not needed in an instant within 10 minutes or within half an hour. People plan properly grocery segment. So we are focusing only on grocery in the Postic. So all the perishable commodities will be there in this segment and high quality range. So we will be operating with only one warehouse in the city. So it will optimize our cost. As if you go through the other platforms, quick commerce platform, they have multiple dark stores in city for 30 to 40. They have to operate to give the service of within 10 minutes or 20 minutes or 30 minutes. But we will be a purely second day delivery platform. We will definitely optimize this timeline also, but not initial status. We are assuring second day delivery. So we can operate with single warehouse and with the proper low cost operations. Generally, if you go through the cart value of the application or the other e-commerce platform is around 400 to 600 rupees any other all the platforms. But our cart value will be more than 900 to 1000 rupees in between. We are assuming that exactly as per our research. So it will be minimum of 800 to 1000 rupees. That is the bare minimum. And operational cost will be for the quick commerce will be the high due to the instant delivery or 30 minutes delivery or 20 minutes delivery. Our cost will be very much, we will be comparatively, we will be cater the same high cart value with the low cost at 25% of the cost of the other e-commerce platform. So this will be our USP, and we are not going with the discount and offers kind of. We are focusing and we are just we are focusing only on the quality, and we will advertise or in media wherever that we will focus on the quality. We are the not discount store. If you are looking at good quality, we will be the best solution for this. As I said, and if you go the other platform, there will be a lot of confusion if you select any of the product. So you will get a multiple range of products. For example, if you select one oil, you will get 100 numbers of oil. So it creates a confusion in the customer's mind. Which what to buy, which to buy. Either we have to go price wise or quality wise or brand wise. So they'll get confused. So we don't want to make confused of customers. It will be very clear. The best will be available on Postic. So this is a segment. This is we are not focusing on the burning of the money or doing advertisement or just getting the consumer on board with the high spending of CAC. No, we will be going slowly in the Postic with steadily. But our rate of just customer will be our acquisition cost will be bare minimum with the minimum cost of the this will get the consumers on the board. So this is a kind of platform I want to address. And Sushma, next slide, please. We will second thing, we will be delivering the complete Postic with the this electric. So it will reduce our cost, operating cost for that. Next slide, please. This is the category wise, phase wise. We are not launching at a time to pile up the inventory. We are focusing in a phase wise manner. We'll come out with the small first initial range of 500 SKUs. This as our in-house Srivari products are 35% of the products are in-house in Srivari out of 500 these SKUs. So how we will focus and how will be the high profitability. This as our own portfolio will be around 30 to 35%, and 45% will be white label by in the name of Srivari on this platform. So that will make in a high profitability and growth drivers. So phase wise we'll go in the second phase, and third phase we'll launch other food products and healthy snacking. So it's a kind of platform will be purely with the healthy platform for grocery, as well as future it will be in snacking also without any preservative or without any chemical processed. So we are not claiming any organic in the Postic, but we are giving the best out of the market, which product are used without any chemicals and this preservatives. Next slide, please. Next slide. Yeah. So many of the product, 25, 20 to 25% of the product will be sold outsourced from other brands to keep up the range of the this inventory. So which will be stickered as a caustic sticker. So it will be clear that our R&D has been done on this product and it's safe and healthy, trustworthy product. So this is our how we'll create a caustic brand to make them a clarity on the product. So it is, if there is any sticker on the caustic pasted means it is a, it's a quality tested properly sourced and quality tested. This is how we want to brand symbolize the brand, and community building encouragement will be there in the future. Second, next slide please. Some campaigns are running as newspaper campaigns and some community based campaigns and location based campaigns to focus and create the customer base properly with the minimum cost. We won't spend as a just like other companies do. We will optimize the cost properly and we'll use this funds very systematically on the advertisement, and we'll use influencer marketing and performance based marketing. Social media will be the becoming the, now it's a daily life people's healthy regular life creation actually. The next slide. Segmental growth, as already Sushma has given the outcome on the this exactly on the tons usage of the our plants. So next slide please. This is what we have started with the 12 SKUs at the start, and today we are running with the 88 SKUs, and more to come. Many more SKUs. Our Srivari is purely focused on to get the every kitchen product in our brand name with the proper quality and this trust. Next slide, please. Next slide, please. Yeah, this partnership with this B2B model, Jumbotel, they are doing almost 2 lakh stores in their platform. So we started with the now Hyderabad, and soon we are going to launch in the Karnataka and other 4 states with them. So this is a strategic tie with the Jumbotel. It soon will be announced for the other regions also. Next, next, please. Yeah, this as I said, next. Yeah, financial performance. Yeah, as we have in the earlier this investors meet, we have committed some growth percentage, and we didn't reach out in the last year. That we do because of the challenges of this new setup. It's a huge setup, and second thing is the delay in the rights. We have planned to in June, but it will be placed on October. And second thing, because of that, our oil plant was delayed, so we couldn't get the numbers reach up to the mark as we promised. But definitely now it's operational in the this, and product will be placed in the month end till month end. All the oil product will be placed in the complete marketplaces. So will the growth driver will be, we will maintain as per in our last conversation what we committed to the in this investors meet. Still, the one thing I want to focus and just to give the clarity on that, our PAT has been decreased. See, PAT has been decreased due to the new plant commencement, and we have claimed the depreciation of the 6 months. Because of that, PAT has been decreased. But our overall, these numbers are positive. Our gross profit are positive in around 12 paisa. So the growth is on, and with the proper profitability. Only because of the depreciation, we are, our net profit has been a little bit down with the last comparison in the last year. Next slide, please. These are the results as everyone knows about it, and thank you for this. The Sushma, over to you.
Now I request the investors to start with your Q&A session.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Raise an Icon tab available on your toolbar or on the QA tab available on your screen. Kindly turn on your microphone when the operator announces your name. You may also post your text questions. We will wait for a moment while the question queue assembles. We'll take a first question from Shubham Gupta, an individual investor. Please go ahead. Mr. Gupta, please unmute yourself
Hello,
and go ahead with your question.
am I audible? Am I
Yes.
audible? Yeah, hi sir, thanks for the chance. My question would be, since we are now targeting 100% growth as we have stated earlier, or next set of growth for the company. But if I look at the financials at the balance sheet, are we are tied up, a lot of funds are tied up in working capital. So how do we plan to go forward the blood of the business to arrange for the funds for the company for the next set of growth?
So as of now, now it's clear. Is it audible, Sushma?
Yes, sir.
Yes.
Yes, we can hear
Yeah.
you.
Yes, you're
Okay.
audible.
Yeah. Yeah. Exactly. Exactly. Thanks for the question. As we already reached the fund, so as of now, we doesn't need till next number set of numbers of this financial year. So half yearly will be completed with the same the kind of this our funds we are having in the as in the raised in the rights. And further we have future as a not yet planned exactly, but we have backup of the banking also parallelly, so we can go with the banking also. We can add borrowing from this banking also as a parallelly.
So what would be the facility right now from banks for the working capital, sir? The limit we
Already
have?
this 12 crores is the facility, 1200 lakhs is the facility with the banking, so we can move further, we can fund from the banking also, and parallelly we will be as of now we are not looking any fundraise for the next this how H1. After H2 we will, as per the this once it is achievement is there, later on we see if it is a cash claims, we'll definitely address on that, because we don't need much fund in the post.
Okay.
Costly is a platform we can sell. It's a 100% cash and carry, so we doesn't need huge fund on that. So only in the this regular our segment, which are our own manufacturing, we need for that. So utilize capacity utilization is already it's up to the mark, and we will reach 100% by this financial year. So we don't need any expansion in that kind of machineries or that. So we will be able to
Understood.
manage with the bare minimum funds.
Okay, so out of 12 crore facility, how much has been utilized till now?
So see, almost 15 is utilized, and it soon will be updated in the NSE also. So we are having the backup of this financial year.
No, no, I think there's a mismatch. You said there's a 12 crore facility limit for you.
Acha, okay, that is completely used. That the bank facilities you are asking about, that is used already.
Do we plan to raise that as well?
Yes, soon we are going to raise in the after a quarter. As of now, we doesn't need any funds.
Understood. Okay.
Sorry to interrupt, sir. I just want to clear it. We have completely utilized the rights issue funds, whatever we have raised, like by 31st March 25, like for the plant and whatever, as mentioned in the letter of offer for the utilization of the objects, we have utilized it. And the funds, whatever you are talking about, like how are you going to manage? So maybe we have as sir said, banking channels. We have like we can raise funds, borrow funds from banks and all. So we haven't yet decided anything regarding raising of funds. I hope
Understood.
it's clear for
And
you.
based on the present financials, till what limit we can increase these bank facilities?
Based off the financial, we can increase we can double your facilities. We can double the facilities.
So we can go to up till 24 crores.
Yes.
Understood. Thank you. That's all from my side, sir. Thanks.
Thank you.
Thank you. We'll take our next question from Vaibhav Lohia from Commercial Freight Movers. Please go ahead. Mr. Lohia, please unmute your connection and go ahead with your question, please.
Thanks for the opportunity. Am I audible?
Yes, please go
Yeah,
ahead.
it's audible, Vaibhavji. Vaibhavji, it's audible, clear.
Yeah. Yeah. So I wanted to understand what is the mathematical calculation for 100% growth for FY26? Because I can see that the atta and the spices factory are almost 100% utilized, like almost. And the new facility only has a potential revenue of 60 crores. So what is the calculation for 100% growth for this year?
Welcome back, Vaibhavji. You are the consistent investor. You are with the Srivari, and thanks for that. So I'll address this about the 65% of the spices is utilized, and now we are taking up spices. In the first phase, we are taking up spices with other states. We are focusing on the next driver with the four states growth. So that will be with the entry level will with the spices. Later on with the atta, not in the oil, and this spices will be the next driver for other states growth. And already if you go through the presentation, utilization of spices is done with 65% only. So overall, for if we go for the this utilization, go through the utilization, this numbers, it's growth drivers enough for us for this financials, and we don't need any expansion. Only atta is utilized. Atta we are not focusing on the other state, and it's a cost. It's a high cost for the freight and this transportations. So we cannot focus in all the states with the atta initially. So we'll start with the spices and oil. So this is our how we the and spices. If you go through that, it's a 65% is utilized and 35% still is there. So we can utilize up to the mark and 100% in the spices. Then and 88 is all the atta. So atta will be done 100% this year, and we are expecting this year all the our capacity utilization will be up to 90% plus in all the three segments, including oil. So this will be the go driver for if you go through that atta utilization and oil. Oil is a we haven't utilized anything in the oil the last financial year. So it will be adding at least 30 to 40 crores of the numbers with the oil. So you can estimate that calculation, and it will be a growth. And parallelly, we are coming out with the postic. Postic will add another benchmark on the this specifically revenue growth will be. And Postic is a platform for e-commerce. Parallelly, we are focusing on our own brand, our own label with all the groceries. We are entering Srivari as a multiple product with repacked also will be in Srivari name, and that will our focus will in other platform parallelly with other e-commerce platform or quick commerce platforms. That will be we are into the process of listing of all our products in Instamart, Blinkit, as well as this big basket and everywhere. So it will add a huge revenue for that. That will be repacking. That 400 plus 500 around SKUs will be repacked by Srivari in the brand name of Srivari. So that make a sense of adding the growth percentage as we have mentioned in the earlier calls.
Okay, so I can expect a large chunk of revenue coming from Postic as well, right?
Yes.
Okay, okay, got it.
So
Thank you.
all together will be see oil, postage, and existing this spices. All this make a contribution of parallelly. Every segment will contribute. So it will be achieved.
Okay, understood.
Vaibhav, does that answer your question, Vaibhav?
Yeah, yeah, understood. Thank you.
All right, thank you. Ladies and gentlemen, to ask a question, please click on the raise hand icon tab available on your toolbar. We'll take a text question from Arjun Singh, an individual investor. Our oil unit capacity is 7,200 ton per annum. Average
Mhm.
rate of oil is rupees 200 per liter. So total revenue will be around 150 crore. How management said oil unit will generate 5 crore revenue per month, although it comes around 12.5 crore per month.
So we are not revenue. We are not targeting 150 crores with the oil itself. So our focus is on a complete segment with the spices, oil, and this postage, and this growth drivers will be this. Oil will go slowly. It will take some time for the placements. So we are not like clearly saying that only the contributor will the big contribute with the oil, but all the segment will contribute parallelly in the segments, all the segments.
Thank you. We have a live question from Tejas Jadhav, an individual investor. Please go ahead. Tejas, can you please unmute your connection? Tejas Jadhav. Since there is no response, we'll take the next question from Saurav Jalan from SJ Capital. Saurav, please unmute your line and go ahead with your question, please. Mr. Saurav Jalan, please unmute your microphone and go ahead with your question. Not have a response. We'll take a text question from Arvind Kumar, an investor. What revenue we can expect in FY26?
So, Sushma, you have to address this question as we cannot disclose the exactly revenue numbers.
Yeah. Hello, Arvind Kumar. Actually, we cannot give any kind of numbers like this, as these are like all UPSI related information. I hope you can understand. We cannot comment on these revenue numbers.
Thank you. We have a question from Tejas Jadhav, an individual investor. Please go ahead, Tejas.
Can you hear me?
Yes, we can. Please go ahead.
So, sir, I have two questions. First one is on the oil plant. So, the recently we have started the oil plant. Is it only for the groundnut oil, or will there be other oils in will be launched in future in this financial year? And my second question is on the Paustik segment that we have started. So, was there any market survey done for this, and what kind of orders or monthly run rate that we are expecting with this? That's it.
Yeah, this is by Tejas Jadhav, right?
Correct.
Yeah, Tejas. Yeah, wow. The first question was what exactly?
First one was
Sir,
on the oil plant. So
Yeah, okay. So with the oil plant, we have started with the groundnut oil, and later on we'll add sesame oil and safflower oil parallelly. These three oils will be operated in this plant. Actually, we can grind any kind of oil, any product in this unit. It's a premium unit, completely based out of export-oriented unit. So our focus is on all the oils which are into the double filter or cold press. Both we can produce these both the oils, double filter as well as cold press. So initially with the starting, as we have in this South India, we are having a very good market share of groundnut oil. So we started with the groundnut oil. Generally, overall, if you see the this positioning of the groundnut oil is a percentage wise, so 7 to 8% is the overall sales of this oil segment. Major out of the all other oils, as a refined oil is there, sunflower oil is there, and palm oil is there. Apart from that, so 7 to 8% is a groundnut oil. So we are focusing on the 7 to 8% major segment. Sesame oil and safflower oil, it's a 1 to 2% of market share. So we want to start with the high market share of the product. So we started, and secondary thing, our USP is in groundnut is we are into the base of the raw material. From our factory 50-kilometer radius, we are getting all the materials in groundnut. We are the this Telangana is the biggest producer of the groundnut parallelly, and specifically our location of factory in the 50-kilometer radius is a complete sourcing. So it will it will reduce our transportation cost. As a high quality product we can get from that. So second biggest producer in Gujarat also, but there is a difference in sourcing of the product in Gujarat as well as Telangana. Telangana product is high quality and flavored, and this Gujarat product is a big and is a hybrid one. So this is our USP. We made it USP because of the sourcing and market share. We are focused on the oil, and we will come out with the other oils also parallelly in soon in coming quarters. After 2 quarters, we'll plan for the others, other segments. And second thing is on the Postic. The Postic haven't launched yet. In this current, we are closing soon. It will be announced in this month end. So we are ready with the to take off that. It's a fine on the we are on the final stage of the takeoff. It's a delay of the this iOS deployment of our this application that was delayed. So we got the approval the last week. So now we are updating that application, and in month end we'll launch. But we are focusing on some community based focused out there, and our we have a database of community which are really needed, badly needed. The quality is missing in the market. As I said earlier in the investors meet, ATA. Specifically ATA, we are not finding any good quality ATA in any other brands. So our major focus is on ATA to get direct to consumer. We can get from direct consumer with the good margins, and we can get focused on specifically focused on the ATA as well as our range of products. So if you go through the this grocery monthly spending, if you take average family will get spending of 4 to 5 thousand. So out of the 5,000, 35% of the products are in-house manufacturing, and 40% will be we are manufacturing in our label. Not manufacturing, we are rebranding. Is it's not rebranding, it's a completely unorganized. 40% as loose raw spices are there, and pulses are there. The pulses and raw spices don't have any brand, specific brand, which cannot be purchased with a specific brand. So that 40% is will be our strength, as we will be repacking in our own this packaging. So that will build a brand image as well as we'll get the revenue sharing also. So this will be the main drivers, the both are, and 20% will be just as ghee. We are not going to manufacture ghee and some other products. So will be sourced which is the best quality available in the market. So out of the 100%, 80% will be in-house our branding only. So this will add on to our complete this company branding will be added with so 500 plus SKUs. So it will create a brand image, and we are not in the hurry in the race with the other quick commerce platform. Overnight we want to get this number, that number. See, slowly within the 6 months of time frame, but in the 2 quarters we are targeting per day targeting deliveries of 300 deliveries. So we are hiring very low with a low inventory as well as low manpower. We are working on that. So as I said earlier in that, we are not a quick commerce. We don't need any additional manpower, additional warehouses, and this with the will operate with the single warehouse and slowly with the this. And again, parallelly, this warehouse and this inventory will be used to cater the other e-commerce platform that will be in Srivari, that will be used in the other platform also parallelly. So we can get a proper order base and huge order base in this, and without any burning of money. So this is how we are targeting this in the posting.
Tejas, does that answer your question?
Yeah. Okay, sir. Thank you and all the best for these two new verticals.
Thank you. We'll take our next question from Saurav Jalan from SJ Capital. Please go ahead. Saurav, can you please unmute your microphone? Mr. Saurav Jalan? Since there is no response, I'll move to the next question from Nitin James. Nitin, please unmute your microphone and go ahead with your question, please.
Hi, sir. I'm Nathan James here. I just joined the call. I had just couple of questions. One is, you had initially promised that you will deliver 100% return on revenue, and if you see year on year, the growth is nowhere close to what you had initially guided for. Second is, I want to know, there was rights issue. How are the funds utilized? I'm sorry if this question has been answered already. I just joined the call and that's why I'm posting this. Thank you.
Sushma, utilization, you just update about the utilization of funds.
Yes, sir. One second. Yeah, as already disclosed in the letter of offer, our main objects of the rights issue was to for the oil plant, which is around 8 crores, 8.64 crores. Sorry, 864.02 lakhs. That is 8 crore 64 lakhs change, and repayment of unsecured loans, which is about 1 crore 90 lakhs. And for working capital requirement, it is around 10 crores, and for general corporate purpose, it is around 4 crores. So, as disclosed in the letter of offer, we have utilized the entire amount for the specified purpose without any deviation.
And
That
this second question, I'll address the second question as a growth drivers, 100%. Yeah, actually, due to the delay in the rights and raising the capitals, our numbers were now up to the mark as insane. But we'll be maintaining this as a in just now. I think you're joined now, right? So with these four segments, different segments, spices, atta, and oil, as well as our postic is our e-commerce platform. With this, we'll achieve the numbers as we have committed in this earlier stages. Next question. I think some text
Thank you.
question is there. Mm.
We have the text question from Vijay Chauhan, RHPMS. Approx REV growth for next 3 years, EBITDA margin guidance for next 2 to 3 years.
Mr. Vijay, as already discussed, we cannot give any kind of guidance. Sorry.
Thank you.
Yeah, can you please take our next question?
Thank you. The next question is Santosh Verma from Viansh Ventures Private Limited. And the question is, how are we planning to market and create a brand presence, both Srivari and Poshtik, as this market is highly competitive and in South, we are competing with Archie, MTR, Eastern, etc. How are planning to attract customers to our products?
As we are into the South Indian markets, we know the pulse of the customer, whole consumer exactly what how we can place it. So strategically, we are moving properly in every quarter. We are going to start in a different states, as I said now. So now our growth will be from next focused states will be Karnataka and Tamil Nadu, as well as Maharashtra and Odisha soon. See, main our USP is only quality. We are placing with the B2B exactly new which are already established players. Just like I said, we are going to venture with the jumbo tail on this platform, and other B2B platforms are there, Kirana stores and different 4 to 5 platforms are there. So we to enter the market with the low cost, we are tying up with them and we'll enter the market as soon in the Tamil Nadu, Karnataka, as well as Maharashtra. We are focusing. So we our strategy to compete with them is we see first of all is ours is a high quality product, but competitive price, and we start with the small placements, small stores focus initially. So we will focus in the general trade, not in the modern trade initially. So it will be not tough for the to enter the market, as it will be a service based business. We are mostly focusing on the service base, which cater small numbers, small ticket sizes, which are 1,000 rupees, 1,500, 2,000, 3,000. With their kind of this, we utilize this B2B platform for that to maintain our profitability. So this is our strategy to enter the other states and compete with them. Next
Thank
question,
you.
please.
Yeah. We have a question from Arvind Kumar, an investor. Can you explain the market size of spices, atta, oil in India? How we can capture the market with other companies? Are we also competing in this? Is the market size big enough?
So it's the market size is very huge on this actually. So it's quite easy. India is the most consumption market, biggest consumption market in the world as per of the consumption, and 80% of the spices are utilized and wheat is utilized in our India itself. So it's a huge market base out of production. More than 2 lakhs crores is spices market. As I said, one important thing is in the spices. Still 70% is unorganized trade. So after the post COVID, now people are moving to this packaging and quality products. So 70% will now come down by 2030. We are expecting 70% will be the organized trade. So it's a huge opportunity and opportunity for our type of companies to grow with the shifting of from unorganized to organized. As well as atta is also same, 70% is in the loose atta, which is unorganized. So it's quite easy with the shift of the market, we can target our consumer, we can get it the. So it's no point of discussion on the competition, because the market is growing with the huge percentages, so we can acquire that market for us. So it will be easy to target this organized market.
Thank you. We'll take the next text question from Arjun Singh, an individual. Oil unit plant cost as per offer letter of right issue is around 8 crore and 10 crore for working capital for oil unit. In balance sheet in FY25, we have purchased fixed asset around 17.5 crore. Is our cost for oil unit setup double? Please tell reason for so much high cost.
So parallelly, that is including that working capital is included in that. That 17.5 crores, as mentioned, as a company secretary had mentioned, and delay was because of we have invested more into this infrastructure, as the civil work was huge in this setup plant. So it was increased by 1 to 1.5 crores of this as we expected in this, and again delay also same with the kind of civil work. So this is as I mentioned, is almost with the including working capital is per month. Only the 20% is increased our cost, which mentioned apart from the mention in the this DRHP.
Sorry to interrupt. I just want to tell this. Our plant is totally automatic, and uh, it is with a new advanced technology where you cannot see those type of plants. Like it is a rare plant, and we have very advanced technology where our product like oil, where you will not find the oil is like we have a more what the rate of the oil. um, I want to say exactly is um, the consumption of the oil, whatever the storage is very good, and it will be stored like without any decay or anything. The storage will be very good for that. Means the storage quantity is good, and whatever the plant we have made, that is totally automatic plant where we are not depend more on the employees, like we are not depend more on the labors. So it is like here again we have a cost cutting of like utilization of our income over there. So this I can say, and again up to you, you can just explain.
Thank you. Thank you. So as I said, that it's a completely automated and export-oriented unit. So the price was somewhat high, and so increased that cost because of that. And it's a kind of first unit in the Andhra and Telangana. We are the first unit this kind of automated plant, premium plant. So this is what as we have utilized and updated in this. So next question,
Thank
please.
you. Yeah. Next question is from Saurav Jalan from SJ Capital. Hello, sir. Thanks for the opportunity. Since revenue from Postic and oil business will start contributing from this financial year, so what is the overall EBITDA and PAT margin which we are expecting in FY26? Also, when are we expecting to generate positive cash flow from operations? Thanks.
Yeah, Sushma, you have to address as a EBITDA and PAT margin. We cannot, it's a compliances issue.
Yeah,
Sushma?
same for this as well, this question. Anything relating to numbers, like, any EBITDA, PAT, or any guidance on the coming years, we cannot disclose. Please understand and do not repeat these kind of questions. Sorry to say this.
Thank you. We'll take our next question from Arvind Kumar, an investor. Can we expect export revenue in FY26?
I think this question will be addressed by the chairman. Okay, see, revenue. See, there is no not a plan for the revenues and this numbers of the exports, but definitely we in the second H2 we are going to start the export. As of now, we can't comment on that revenue part.
Thank you. As there are no further questions, I hand over the call to management for closing comments. Over to you.
Thank you one and all for joining us today. Thank you, Neha ma'am and Narayan sir, for your valuable time. And thank you uh, to this chorus call for arranging this call. Thank you, all the investors, for joining us today. Hope we have addressed all your queries. Thank you.
Thank
Thank
you,
you.
members of the management. On behalf of
Thank you.
Srivari Spices and Foods Limited, that concludes this conference. Thank you for your participation, and you may now exit the meeting. Thank you once again.
Thank you.